Hello everybody, I hope that you are good. Today's video is going to be a bit different because we are going to discuss if we are still in a bear market or if we are now in a bull market. And I know that, this is quite like a mixed opinion. If I made a poll now, the results are probably going to be 50-50. And that is why I think that this is an important topic to bring up in the channel. It's very simple. It's a crossover of two EMAs in the weekly time frame. Now, I know that you have the death cross, the golden cross, and whatsoever. If I'm correct and I'm not wrong, I think the death cross and the golden cross, I think they say that it's the 50 MA and the 200 MA. This is different because we're talking about EMAs, not MAs. EMA means exponential moving average. EMA and MA are two different formulas, okay? And also, I'm using the 20 EMA and the 50 EMA, all right? I'm going to show you now in the history of Bitcoin why I think that this is a good indicator, why I think that in previous times it's been a good signal. It's important that you understand that it's a lagging indicator, so you're going to lose some appreciation in price, when the signal happens, but you're going to have confirmation, which is also quite important. You can see it's very simple, okay? You have the 20 EMA, which is the yellow line, and you also have the 50 EMA, which is the purple line. So it's as simple as this. When the 20 EMA crosses below the 50 EMA, that's a bear market signal, okay? And when the yellow line crosses above the purple line, so basically when the 20 EMA crosses above the 50 MA like this, okay, then this is telling you that it's a bull market, okay, and price should then go up, okay, the EMA should push price up. It's as simple as that. I'm gonna go now back to 2014, okay, so that's 9 years ago, and we're gonna go through all these crossovers. So let's go there. 2014. These are the first crossover that we have here. Okay, you have here the bear market confirmation here. You could discuss that, the bear market started here. Maybe if you go into the daily time frame, you can see maybe here WB pattern. And of course, yes, remember that this is a lagging indicator, okay? So when it prints, and that would be in this zone here, okay? That's telling you that we're in a bear market. You can see the price drops from there. Let me check. Price drops from there at 63%. Okay, and then it establishes in this area. So that's the first thing. Now we have here the next crossover. Okay, the 20 EMA crossing above the 50 EMA. That's telling you that we have a bull market. Okay. Usually you can see that it's quite normal that, you see a big pump. So that gives time the 20 EMA to cross above the 50 EMA. And then when price retests the 20 EMA, that's when you can buy. And that's the buy zone, and it's quite safe to buy there, okay? And you can see in this example, how much percent up. This is 5,500% up, okay? That's nuts. Then 2018, again, well, this one actually came in a very good timing, okay? You have here again the 20 MA crossing below the 50 MA, bear market sign. From there it drops 60%. You have again another signal here, okay? Bull market, it pumps 150%, not bad. And then I know that here gets quite messy in 2020 with the COVID drop. Okay, this drop was crazy. Nobody saw this drop coming. You can see that it proves here that it's quite a lagging indicator because the signal is twice. Okay, but then price ends up recovering. So this one is kind of like a black swan event, to be honest, and it didn't do great here, to be honest. Okay, so now if we go back here, you have the bear market signal in April. From there it drops to be another 60%. So you can kind of notice, I don't know if you've noticed, but when we have the bear market signal, it tends to drop about 60%. Okay, it's happened before, so it's possible that this is the Bitcoin bottom. Okay, now what is important here, remember, it's a lagging indicator. So the most likely thing is that if we want to see this crossover here, okay, we should see a pump first. And then when we see this pump is when this cross can happen. All right. And then, yes, of course, the EMAs are going to catch up with price. Price can retest it. This would be a good buying opportunity. Okay. To be honest, if you notice, we buying pretty much at the same price as we are now. Okay. You wouldn't be missing much. And you know that then price is going to or should go higher from there. Okay. So that's what I'm keeping an eye on. Now, it's very possible that, you know, if we see a drop now, we end up seeing something like this. Okay? I'm not going to tell you that we are in a bull market until I see at least this signal happening. Alright? I hope that's very clear. Now, I know that we have, you know, the halving coming next year. So let's talk about it, okay? These four blue lines, you know, vertical lines, they are the time when we had the halvings, okay? So let's see how price reacted to these halvings, okay? You can see here in 2012 November, the halving happened and we took 50 days, so you know that's almost 2 months, 1 month and a half-ish, until we saw price going up, okay? So that's almost 2 months. You can see that then, you know, halving, 2 months, price goes up. We had here another halving. This is in 2016 in the 11th of July. From here it's interesting because price drops first, okay? But you can see that if we check, price doesn't go higher until, let me check how long this is, 105 days, that's around 3 months, okay? So price takes 3 months, 3 months and a half to go up, okay? So you can see that when the halving happens, you have to be very careful because what happened here is quite scary, okay? We saw a drop right after the halving of a 30%, okay? Then it took 3 months until we saw price going up, okay? So it's important because when you see the halving, you shouldn't expect price to go up immediately. 2020, this was the last halving. Again, 11th of May-ish, you know, that week, and price took 70 days, so that's 2 months, or 2 months and 10 days, 2 months and a half. You can say 2 months, 2 months and a half, until price went higher, okay? So what can we say about this? We can say that usually, right after the halving, price takes between 2 and 3 months to go up, and the next halving is in April. Well, we still don't know the date, but it's very likely that it's between March, April, and May of 2024, okay? I've marked in my chart April, but the point is that you have to understand that once we see the halving, okay, price is gonna take between 2 and 3 months, okay, to do something like this, okay? So if that's April, I would say then until the end of July. So July and August is when you see price going higher. And that's what everybody's expecting because, you know, if you go against the halving, against the 4-year cycle, and you tell me that we are not going to see this, okay, then you're telling me that this time is going to be different. And there is not really much justification of that, okay? That would be to see a big bull market from summer of next year, okay? Of course, I'm going to keep you updated until then. I'm not going anywhere, but this is what we can expect based on the previous halvings and the 4-year cycles, okay? That we see a big trend to the upside from end of July and August. Probably August, I would say, okay, just to be safe. So that's when you want to be in the game, okay? I think we're gonna have if this plays out, we're gonna have a very good time in crypto. So that is pretty much everything I want to tell you. I cannot confirm to you, so if you ask me, are we in a bull market, I'm gonna reply, no, we are in a bear market until it's invalid, okay? And it's invalid when we see this crossover of the 20 and the 50 MA, okay? That's what I'm gonna tell you. That's the first thing that I need to see in order to say that we are no longer in a bear market. I hope that's clear. And still, we could even see something similar to what we saw during the COVID dump, but to the upside, we could see like a fake pump. Okay, so still it wouldn't confirm it, but it would tell me that, yeah, that's a good indicator, okay? That's a good signal. Now, we might see something similar to what we saw in 2019, okay? The halving was in May 2020, and exactly 1 year before the halving, we saw the bullish cross. Okay, that's also in May. Then price pumped, with the crossover, and then consolidate. This is the COVID dump, okay? And then we had the halving. Price took 2.5 months to pump, and then we saw this epic bull market that we had. So if you notice now, the next halving is in April, in spring of 2024. We're exactly 1 year before it happens, and we might be seeing something very similar, okay? We might be seeing the bullish cross. If we see a pump here, okay, then this bullish cross would print, and then, we could go higher just to consolidate again. Who knows, maybe we see again price dropping, okay, stabilize. Now we have the halving, wait 2.5 months or so that will be until August, and this is when we would see price going up, okay? So why not? We might see something like this, okay? Now, to be honest, this COVID dump is quite scary. Imagine for something like this to happen again, okay, that we almost revisited the lows. So if we see something similar, that would go all the way down, maybe all the way to this liquidity pool over here to 17K, okay? But to see something like this, obviously you're gonna need some really bad news. Let me remove all these drawings, because I wanna show you something interesting, okay? And you're gonna see straight away. I've been telling you for quite some time about this zone here. Okay, so that's 25,250-ish. Okay, you're gonna see it well now. I'll do it white. Okay, and if you notice here, okay, it's a zone where we saw a sell-off. Okay, another sell-off, and we haven't tested a support yet. So it was a big resistance that, in theory, we should test a support, and that's right below the 50 and the 20 EMAs in the weekly time frame. So imagine for a second if this happens, okay? We come down to test this previous resistance as support. Okay, so we go below these two EMAs, all right? And we fail to test this resistance as support, okay? And we go down, okay? What would happen then? Then we could expect these two EMAs to turn around, okay? Invalidate the bullish cross, and you would see price going down. I mean, in the chart we have a couple of excuses to visit these zones. Okay, we have a liquidity pool over here that goes all the way to 22K. We also have this wick over here, okay, that goes all the way to 20K, 19.5. So I'm telling you, there is excuses for this to happen. This is what I'm telling you. If I say right now, oh, it looks like we are forming a bullish crossover, it's looking good. I mean, yes, but it's a half truth, because the bullish crossover hasn't happened yet, okay? So there is still a chance that maybe next week or the week after you see a dump, okay? And that's gonna make the 20 EMA and the 50 EMA to turn around again. Okay, so you're gonna continue in this downtrend. You're gonna have a bullish cross. And then the 20 and the 50 EMAs, they're gonna push price low, okay? Maybe to this liquidity pool, maybe to this week, maybe to this other liquidity pool. So I'm telling you, there are reasons to go down again, to be honest. The macro is not looking great neither. Yeah, we're gonna have a recession. So let's see how price reacts to it. What I don't want is to see another, false bullish crossover, okay? And then that we see something like this again, another bearish crossover. And that's what happened here in the COVID dump. If you notice here, price dumps because the COVID, you have the bearish crossover, then price recovers, and instead of testing the 20 and the 50 EMA resistance, okay, that doesn't happen. Price just goes up, so you have another bullish crossover here, And at the end of the day, this is just noise, because if you notice here, price is at the same level 2 months later, okay? What matters is that you had the bullish crossover here, all right? This is just noise. You have here some kind of deviation, okay? They fill this liquidity pool, for example, over here, if you notice, almost to the dollar, very accurate. And then just continues going up. So that's the thing that you don't want to see here again, okay? You don't want to see something like this. What you would like to see is, first, you would need to see a pump, okay? Then when you see a pump above these highs, then is when you are going to be able to see this bullish crossover. And then ideally, what you'd like to see is price coming back down and test the 20 MA as support. And then you can see continuation to the upside. And even if you lose the 20 MA, you still have the 50 MA. But that's literally the last thing that you are holding to. Okay, because if you lose this one, then just price is going to go low again. And you're going to have another bearish crossover. So ideally, what I would like to see is, we will need to see a pump, okay, bullish crossover, let me draw it better, bullish crossover, then you need price to come back down to the 20 MA, test it as support, and then you can go higher. So that's what we want to see, okay? If, in the other hand, we see a dump, you're going to see the EMAs turning around again, and then yes, we're going to go to this liquidity pool, to this week, to this other liquidity pool. I'm trying to be as neutral as possible, and I'm, basing this analysis on this indicator based on data that has happened before. Also based on the halving, okay? We have a halving in next spring, 2024. So here, according to the 4-year cycle that at the moment is intact, it's been working well so far. So if we place out the same again, from here, if you wait 2 months, okay, so that would be, I would say, between July and August, end of July, start of August. From here, you should see price going up again, okay? That's what we're expecting. Then what happens in between, in this one here, who knows what happens? That's why I'm keeping an eye on the crossover. Because if you see the crossover, okay, you have reasons to believe that maybe price can go all the way to this zone again, okay? Then maybe you see some kind of retrace. And at the end, maybe you are still in this zone. So this is what I mean, guys. If you ask me, are we still in a bear market or are we in a bull market now? My answer is going to be, we are still in a bear market until proven otherwise, okay? Even if we've doubled price from the lows, all right? Because yes, we've done 100% pump. You can see it there, all right? But even so, you still don't have any confirmation telling you that we're going to go to 40K next, all right? The only confirmation to me would be we have the bullish crossover in the weekly time frame of the 20 and the 50 MA, and then we tested the 20 MA as support. Okay, in that moment, yes, I'll be favoring 40K. Until then, we still have the chance that the bullish crossover gets invalidated and we see a dump maybe to 22K, maybe to 20K, right? And then this crossover would be invalidated and we would still be, very clearly in a bear market. So that's what I want you to keep in mind. Now, based on the 4-year cycle, I'm going to be honest with you. We've seen that it's been playing out very well, and there is some kind of pattern that after the halving, we have between 2 and 3 months of, some kind of sideways, okay? So that's what I'm expecting for the next bull market. I don't know if we're going to see, again, the crossover and a pump, or if we're going to see a dump and then, the crossover gets invalidated. But what I can tell you is that I think that it's very likely that by August of 2024, July and August, we're going to be in a very good uptrend, or that's what time and data and history has been telling us since then, all right? You can see here. Why not? Why couldn't we expect another big uptrend from August 2024, all right? Not supporting that theory is saying that this time is going to be different, all right? So that's what I'm going to keep an eye on, okay? August 2024, we should see a big bull market. Until then, who knows? We might see this scenario playing out that I drew here, or we could see the other scenario that it's basically invalidating the bullish cross, price goes down, and we can, establish in this zone over here. So that's what I think, guys. I hope that the video is clear. Thank you so much for watching, and I'll see you soon.